Have you heard of the concept of saving money for growth? It means going beyond traditional low-interest savings accounts, which often lose to inflation, and choosing options that offer higher returns through interest, dividends, or capital appreciation. The best choices depend on your risk tolerance, time horizon, and location. If you're in Nigeria, local options like high-yield fixed-income products are especially attractive due to elevated interest rates. Here's a breakdown of key places to put your money for meaningful growth in 2026, starting with safer options and moving to higher growth but riskier ones. These reflect current trends. Globally, high-yield savings are around 4 to 5% APY, while in Nigeria, fixed income yields remain strong, often 18 to 26%, amid moderating inflation and recent CBN rate adjustments. 1. High-yield savings accounts or money market funds, low risk, good liquidity. Why for growth? These earn competitive interest with easy access, beating regular savings and helping your money grow steadily without much risk. Global options. Online high-yield savings accounts currently offer up to approximately 4 to 5% APY. In Nigeria, money market funds are standout, yielding 22 to 26% annually. For example, funds from ARM, Stanbic, IBTC, or Legacy. They're liquid, low risk, and managed professionally. Best for emergency funds or short-term savings you might need soon. 2. Treasury bills, T-bills, and government bonds. Very low risk, tax advantages. Why for growth? Government-backed, virtually no default risk, and strong yields in Nigeria right now. Current rates? Nigerian T-bills around 18 to 22%. For example, 364-day often approximately 20% true yield tax-free. FGN savings bonds approximately 17% plus for 2 to 3 years. Best for safe, predictable growth, especially if you're in Nigeria, where these outperform many global safe options. 3. Fixed deposits/term deposits, low moderate risk, similar to T-bills but through banks, often 15 to 20% in Nigeria. Lock in for 6 to 12 plus months for guaranteed returns. Share. 4. Stocks/equities, higher risk, high growth potential. Why for growth? Historically, stocks, especially broad indexes, deliver the strongest long-term returns, approximately 10% average annually globally, higher in growth periods. Options. Invest in the Nigerian Stock Exchange, NGX, via individual stocks, equity mutual funds, or ETFs. Nigerian equities have shown strong performance recently, for example, all-share index gains. Global S&P 500 index funds/ETFs for diversified exposure. Sectors to watch in Nigeria: banking, consumer goods, tech/telecom, or growth areas like renewables. Best for long-term horizons, 5+ years. Higher volatility but potential for compounding growth. 5. Mutual funds or ETFs, moderate risk, diversified growth. Equity mutual funds in Nigeria can target 25 to 35% potential returns. Bond or balanced funds for steadier growth. Great for beginners. Professional management and diversification. 6. Real estate, moderate high risk, long-term growth. Direct property, REITs, or real estate funds for rental income plus appreciation. Strong in Nigeria for land or income-generating properties. Key tips for you in Abuja/Nigeria. Prioritize Naira-denominated fixed income, T-bills, money market funds. For now, they offer excellent real returns given local rates. Diversify. Keep some in liquid/high-yield options. Invest longer-term portions in equities. Consider inflation, approximately 15% recently, trending down. Aim for returns above it. Start small. Use reputable platforms, for example via banks, stockbrokers, or apps like Bamboo/Rise for easier access. Risk warning. Higher growth equals higher risk. Possible losses in stocks. Consult a financial advisor for personalized advice. I hope this gives you direction on where to start. Please subscribe, like, and share.